Happy Monday, everybody. Okay, so this week's video, I'm going to talk about a few articles I read this last week that I found fascinating. One about investments, another, it's kind of another Cobra effect. So we'll get into that in a minute. But first, about the investments. There's a website called insidersentiment.com. It was founded by a professor from the University of Michigan. And what they do is they track insider trading. What's insider trading? That's the trading of stocks of a company done by the insiders who are the really what you're looking at are the C-suite executives. So the CEO, the COO, the CFO. Those are the folks that have the best pulse on a company and know whether things are going good or bad, if it's time to buy stocks or sell stocks. And so what this website does is just track what are they doing. They don't have a dog in the race. They just want to track who's buying what and who's selling what. Well, over the last few weeks, sentiment has gone negative, and we've had the highest level of insider selling that we've had in 10 years. So, what you want to see in a good economy is the insiders, the ones who know best, buying up more stock because they have high hopes on where that stock's going to go because they're putting their elbow grease in and they know all the numbers and ins and outs and they know the stock's going to go from here to here. So they're going to buy it. We've seen a decrease, a negative number coming out of that ratio. So insiders are now selling at the highest level they've sold in 10 years. So the other thing about this report which was interesting, is that these insiders are selling across the board, whether it's in tech stocks or, you know, dividend stocks or growth stocks or value stocks, everything. They're selling everything. Why are they selling? Well, that we don't know, but we do know they're selling. So you could speculate that they expect the stock to not go from here to here, because if they're going to go from here to here, they wouldn't be selling here, right? But if they think that the stock's going to go from here to here, then that's a good reason to sell. So you would be selling now. All right. So everything's selling at the highest rate in 10 years, except for three categories. This is interesting: consumer staples, materials, and utilities. That sounds familiar. So consumer staples, that's the things that people need all the time, right? Now there's corporate stocks out there that sell consumer staples. We like investing in consumer staples too, but we're doing it at the raw level, right? Like with wheat and corn and coffee beans and steel and rubber. And but when those commodity type products come together and are manufactured, they produce staples. Utilities, that's another one. Well, what do utilities do? They manage energy. That's another big one that we like. And then materials, and that goes back to the raw materials that we like as well. So insiders have not been trading at that level. Hmm, Makes sense. It just lines up with kind of where we see things going as well. Now, here's the one caveat I will say though with insider trading: just because insiders are selling here because they think the stock's going to go down here doesn't mean it will, because the stock market is very emotional. And when the rest of the world's investing, the hysteria might be so wound up that those insiders are relying too much on data and not accounting for hysterics in the market, right? So there may be people buying things that drive the price even higher. So all it is a indicator, not necessarily a predictor. However, it's a good indicator. It really is. And with that, I'll say I'm glad to read it, and that's how we're investing for our clients. Okay, next article I read. This is fascinating. This is another uh, Cobra effect. And I don't know if you all have heard of a reticular activating system. That's where your brain, when you're thinking, like when you're a new parent, right? Or when your wife is pregnant, or if you're a woman and you're pregnant, and all of a sudden all you see are pregnant women or families with new babies. That's because your reticular activating system is looking for what you are have or are looking forward to. Well, I think that may be what's going on with my brain with Cobra effects, because right now I'm seeing Cobra effects everywhere. Okay, so I'm going to talk about politics a little bit. Back in 2020, Andrew Yang was a Silicon Valley investor, and he was running for president for the Democratic ticket. One of the things that caught my attention with him was he was espousing universal basic income. He said, the United States is so wealthy, we should get rid of welfare and give everybody of working age $1,000 a month, just free income. Because what he said was that would encourage entrepreneurship. It would also encourage people to have a little bit of freedom and flexibility to go find the job that they really want to have versus just a job that they have to have. And it would just raise everybody's standard of living. I was always skeptical of this, and for good reason. There was actually a study done, and the study was by the National Bureau of Economic Research. I've written a few notes here. They just completed a 3-year study where they watched 3,000 participants, and they gave each of the 3,000 participants $1,000 a month over 3 years. Now, what do you think happened? Do you think they got the entrepreneurial bug and started their own businesses? Or do you think they said, free money, I'm just going to relax and watch some TV? Well, I'm not sure exactly what they were doing, but we do know that they didn't start new businesses. There was some more entrepreneurial activity, but the activity didn't lead to any results, no financial results over 3 years. So that's not a good entrepreneurial endeavor if you don't have financial results. What we did see come out of it is that there was more leisure time for those participants. And here's the fascinating thing. The individual income of all of those 3,000 people went down from where it was before, because they had free money and they were willing to do without for some things. And they didn't all quit their jobs, but a lot of them pared back on their jobs because they didn't have to work. This is a lot like what we saw during COVID, where people were getting stimmy checks, right? And unemployment was super high, and employers couldn't attract people enough without paying through the roof, because why go to work when you're getting free money in the mailbox? So there you go. There's a academic study that really indicates that the universal basic income doesn't produce the end result that Andrew Yang talked about. It sounds good on paper, like Cobra effects often do, but then the end result really gave us the opposite of what the goal was. So I guess what they ultimately found out is that free money just doesn't solve problems. Okay, so that's it for this week. Hope you guys enjoyed this video. If you did, please give me a thumbs up, and we'll see you next week. Take care.